Welcome back. Welcome back, everyone. I'd like to call up our next panel. Grab a seat if you need one, and watch out, there's a little coffee spill down the center aisle, so please be careful of that. Crude oil tankers, why the bull run is set to last. Discussion led by Christa Volpicelli, Head of Shipping Investment Banking at Citi. Christa, thank you, and thank you, panel.
Making sure this is working? Great. Thanks, everyone. Hope everyone enjoyed the lunch. We have 30 minutes today to talk through the tanker panel. Three very esteemed panelists who likely need no introduction. We have Lars from Frontline, Lois from International Seaways, and Ted from Navios. As we get started, I want to just ask each of you to maybe start with some comments. So this is a panel focused on the crude tanker fleet. Of course, you all have a diverse set of assets in your portfolios, but we will try to stay focused on crude. But maybe as we get started, you could each give a few comments about what you are most focused on today at this moment as a senior executive of a company in the crude tanker sector. So Ted, maybe I'll start with you.
Sure. I mean, it really, to a certain extent, it doesn't matter where you are in the cycle. You have a stable of assets that we have 45 tankers in the stable. We'd like to keep them modern, obviously, technologically advanced with all these regulations coming. We want to have an operational edge, like the three companies do here. You want to keep operational efficiencies high and carbon emissions low. I think that going forward, it's a matter of the question we have in front of us is, how long is this run? I mean, it's obvious that things have changed. We've hit a tipping point. And the numbers we're seeing are, you're at 20-year averages, well above 20-year averages, approaching 20-year averages. How do you trade the vessels? And that's the question for us going forward.
Lois?
Yep. Yes. So, at International Seaways, where we are at the point in the cycle, I think that we're building off of what Ted has said. We're very focused on capital allocation and, returns to shareholders, as well as we have been paying down debt, and then making sure all your blocking and tackling is really happen. I think that, safety first. Then you're really looking at making sure that each of your ships is, optimized from revenue and expense perspective, and really getting down to the operations of making sure you're running the very best you can every single day.
Excellent. And Lars, what are you most focused on today?
Well, I don't really want to echo what's been said there, which is all true. Basically, one of the key kind of nearby challenges that's been thrown at tankers is obviously EU ETS, which is something we spend time on. But operationally, we are at a point in a cycle where we think it looks very, very encouraging. I've had a few investor meetings today, and the Wall Street are waking up to tankers. I think that's really, really encouraging. So as we need to think about this. The tanker market has been challenged for quite a few years, and the market actually owes us a lot of money, and we're looking forward to collect that.
And you will. We all will.
So Ted, you made the comment, the question is how much runway remains. And I think that is probably the key question on every investor's mind in this room, right? You're all public companies. Your stock prices have run up significantly. There's still significant value to come. We've seen various presentations over the course of the last few days talking about, when will peak oil come? What is some of the investment needed? Torolov was up here talking about the importance of the supply as perhaps even more important than the demand picture. But as you think about the cycle, the supply-demand balance, and the fact that we've seen this tremendous run in tankers, how long is this going to last in your view?
You want a date? Is that right?
Precise.
Well, you have a very good supply and demand fundamentals, right? Supply side has been constrained by IMO. So to a certain extent, the dictates of the government, the IMO regulations, have really saved us from ourselves, right? Because if this was not in front of us, there'd be more than 13 VLCCs on order today. And you just can't do that with what we see in front of us. So I do think going forward, you have good supply and demand fundamentals because you have, growth, 2.5 million more barrels coming by the end of the year, we think. Think about it this way, 1 million barrels extra out of the Persian Gulf or the Mideast Gulf is about 30 VLCCs required for a year, if you're going to add that 1 million. So you have these fundamentals, and then on top of that, you have the Ukraine issue where there's sanctions that has increased ton miles, obviously, in terms of Europe not getting the oil from Russia and then moving it around to the Far East, and then Europe having to get it from farther away. And then also on top of that, you have more crude coming out of the Atlantic and more refineries coming out of the Middle East. It's another issue for products. And it's a long runway. I can't tell you how long it is, but our debate is how long do we spot the Vs that we normally put out on period before we go period? Do you put them for 5 years? Do you put them for 3 years? Do you spot them for 2 years? It's a very, because 5 years from now, you want to look back and say, we've maximized revenue and profitability. And a lot of it has to do is, how long do you play the spot market? There's a good runway here. I mean, because we're owners, we're going to say that, but our job in senior management is sort of poke holes in that to see where the weaknesses are. Outside of another black swan, which seem to be coming more frequently, or China going into a recession, even though they're importing more oil than they've done, it's hard for me to see any yellow lights.
So, just building on the supply side, one of the comments I make is that in the tanker space, we're blessed with our market, in this case, coming last. And what do I mean by that? Container markets, were all the rage, LNG, so that, you have a very sizable order book in the yards that we, all frequent of alternate tonnage types. So that's a very good construct. And I agree with Ted that in the sense that, people will say, oh, you guys have gotten discipline. Okay, we have gotten the discipline. I think tanker owners are smart and everybody's looking at, okay, a multi-fuel future. What shall I build? As well as, the availability for, I'm not going to say a V, but the availability for most of the other tonnage would be 2026 today. So to have a 3-year runway before an onslaught of tonnage can come is really pretty exceptional based on history. So that's the supply side. And from a demand perspective, we're still in a post-COVID above cycle, demand cycle, provided that we don't get too many headwinds economically.
Yeah, just to build on Lois here. So the supply side, we believe is pretty much done and dusted until 2026. It's a very low probability of, kind of a lot of ships entering the market. And we have an age challenge with the fleet. The fleet is actually getting older, which is counterintuitive considering the regulatory framework we're facing. And it's our duty to the society to distribute the wealth of hydrocarbons to the countries less fortunate, and as effectively as possible. So kind of the only area where it's difficult to understand kind of what's going on is obviously on the oil supply side. If the ones advocating demand growth are right, we're going to run out of oil. If the ones advocating for demand kind of reduction due to kind of shift in energy demand or a recession, we're still actually going to be okay on the shipping side. So I think this is kind of a pretty unique proposition we're facing here.
Great, thank you. I wanted to pick up a bit on some comments you made, Lois. So you started to talk about, every owner is very much focused on thinking about the fuel of the future and what will this mean for the global fleet. But as you think about environmental regulations and how they're impacting you today, how they're impacting how you manage your fleets, how they impact how you've staffed up internally, What are some of the things that you are grappling with, today and over the next few years in terms of adapting your businesses to the environmental regulations? Lars, do you want to start?
Yeah, we're fortunate to be a part of a very big platform, and we draw synergies from that. We have asset classes kind of under the umbrella that are more advanced than tankers on propulsion. We have, LNG propulsion. We have kind of on the LPG side, they're looking at ammonia and so forth. So we're looking at it, but the thing is, this needs to be, we're obviously responsible to the environment, to our children and all that, but we're also responsible to our shareholders. So this is actually a very, very difficult kind of thing to address. But what we're doing is obviously spending time and having a team who is collaborating between the asset classes to see what solutions are out there, how feasible are they for the various asset classes, and kind of is it economically viable, to go kind of down these various roads. It's it's a complicated web, but we're taking it on. I do believe I mentioned EU ETS early on. That's going to be kind of a penalizing kind of thing that will make us think about much harder about alternative fuels. It's also going to force biofuel into the mix, I think, to a greater degree in Europe. So we're getting there, but it is a very, very difficult kind of. You can't really decide at this point, I believe. You need to keep your options open.
Go on the line. From our perspective, we're super excited to have taken the third VLCC this month that, in a series of dual-fuel LNG ships that are on long-term charter. And those vessels, with existing regulations, will operate well into the 2040s, right? So that's a component to the fleet. As owners, I think there's, for us, a big effort to make sure that we're optimizing every ship that is on the water today, and that includes, the Mavis ducts and, the boss fin caps and the paint and, really utilizing some resources at the company to make sure that we're keeping abreast of all the different projects that are ongoing and ways to incrementally improve. Because I like to say the engineers and the architects are having their moment, and probably well-deserved, because I think the level of innovation will only increase. So, as a tanker company, you do have an increasing small but mighty contingent of people that are really spending their time figuring out what innovations are going to work and what is perhaps a blind alley. And it's not 100% clear yet. So that would be kind of the dual focus.
Yes, I agree with Lars and Lois about this. I think we have an internal team, technical, that's singularly focused on this. But I want to pick up your point at the beginning, Christa. You said something about is the industry. How are they dealing with this? I don't see, besides the owners doing our internal work we have to do. Listen, we all know LNG is probably the intermediate fuel till we discover the next fuel. And maybe there's some carbon capture going. And we do have some Aframaxes that are dual fuel. And so we're all going that direction. The thing is, we don't know what the penalties are going to be by 2027 when they come in, right? There's going to be penalties. And you go to charters, and they're not even thinking about it yet. But what's interesting is it's a government, fiat that's creating this. But the market, I think the market will give the penalty or the premium. For example, VLCC, you can add $6,000 if you're Eco, and you can add another $6,000 if you're an Eco with a scrubber. So it's a premium if you got it, it's a penalty if you don't. And I think that's you're going to have a stratification of different types of vessels getting, if you blend it all together, it's the same rate, but there will be penalties and premiums that will be put on by the market itself.
Do you see this playing out today in asset values in this S&P market?
No, the war is creating an asset value bubble, as I'd say, for the end?
Well, or perhaps, Ted, a coming together of rates, right? Where especially, at the very beginning of the war, customers immediately move to the vessels that are, easiest and nearest by, and then as time goes on, the market starts to rationalize, right? So you would see a convergence of the rates based upon that high kick-in additional ton miles. That's what I would say.
No, I agree, because whatever you're in, tankers, containers, dry, the rates, the biggest spread in the rate is the middle of the market, right? At the top of the market, the charters just want a ship, and that will squeeze at the top, and it also, so the bad ships get almost as much as the good ships. You just need a ship, a charter needs a ship. At the bottom of the market, the more efficient ships have to reduce their premium. The biggest spread is in the middle, and we're not going to be in that middle for a long time. We're going to be in, I would say, the top third, but it doesn't mean it's going to be gone in a year. I think you can run, 20-year averages mean you have to be over that average for half the time. So people talk, oh, you're at 20-year average. Well, half the time you're above it. So there's a good runway here.
Excellent, thank you. Switching gears a little bit, so panel's focused on crude, but each of you have investments in product tankers as well in your companies. Maybe Lois, we'll start with you. Can you talk about the benefits of having both crude tankers and product tankers in your fleet? What's good about it? What are the challenges? Of course, investors have the opportunity to invest in pure play crude companies or pure play product tankers, but why does International Seaways have both?
I would say that, this market really is showcasing why it's fabulous to have diversified, they're all either crude or product carriers, right? So, for example, with Russia right now, OPEC would like for them to cut back 500,000 barrels a day. Are they doing it? Doesn't look like it. However, what it looks like is they're, in country increasing their refined product, right? So therefore, they're enhancing how much product they're putting on the water, right? So you see just within this pivotal, critical country at the moment where that can help them put out less crude, and they're putting out more products. So if you have both crude and product carriers, although we are not loading in Russia, it creates more ton miles on crude if they're pushing it out, or product if they're pushing that out, right? So you really see the connection being showcased right now.
Got it. We're going to end with Ted because you have a more diverse fleet, so maybe go to Lars next.
Yeah, no, it's, all these asset classes are interconnected. So when you're a tanker owner and you have kind of the different asset classes kind of in your company, you see that, with a helicopter view, you'll actually see that there's a very, very high degree of correlation between VLCCs, Suezmaxes, LR2s, MRs, Handy, whatever. I think kind of, before Russia, we had the COVID. The kind of the industry of refining molecules hasn't really been a luxury business for many, many, many years. And COVID was the kind of death blow to a lot of refiners, particularly in Europe. And this has kind of created this situation where we're actually, the distance between markets and refining capacity, which has obviously increased in Middle East and Asia, has increased. But I think kind of what was at least proven to us at Frontline during last year was to have, we like to say we have 3 or 4 legs to stand on, because we have the interchangeability on the LR2, to Aframax side as well. To have those legs to stand on in this kind of very, very, our market is full of black swans, almost as if it's the white swans we're kind of afraid of. So to have that diversity is actually, it hedges out some of the tail end risk in being a ship owner.
Right. I agree with the hedging. I do my simple math, but I've looked at correlations, and if you take the V's and the Su's and the Aframaxes and make it one group and you bring it to product, it's roughly a 67% correlation in rates. So it's a hedge, and it's a hedge you can play off of, right? It's not 100%. And also, on the product side, we got into products many years back because of the ton mile issue. And it really has extended itself now, because over the next 4 or 5 years, I can't forget, the EIA, the IEA, or both of them saying there's another 4 million barrels coming in the next 4 to 5 years out of the Atlantic, the US, Brazil, Guyana, and all refineries are happening in the Middle East. That means there's going to be less crude coming out of the Middle East. That plays in line for products, right? Products, the icing on the cake for products is geographic arbitrage, pricing arbitrage, different routes, and that's all flipped up in the air. And there's all kinds of arbitrages going in different directions, which is wonderful for us, because the less efficient the fleet, the less the fleet, there's less ships to pick from. And so the price has gone up. I mean, we had, I'm sure you were the same, we had smart money coming to us a year ago looking to take MRs for years. And you can tell they saw the same numbers down the road that we did, so you hold your cards.
And so, staying on this topic, is it purely opportunistic in terms of when you see an opportunity to invest in a new asset? As you think about the mix of crude versus product, how do you think, are you targeting a certain mix, or has it purely been an evolving topic as you see the markets? Any of you can start.
Listen, you can do deals at the top of the market. I mean, we've done deals at the top of the market, all of us, as long as you're covered. Right? You don't do an open spec and order, like they did years ago, 10 VLCCs open. So I think for us, it's a matter of adding to the fleet. We're not crude or, we have 11 Vs and what does that make, 34 product tankers. But in terms of dead weight, carrying capacity, and earning capacity, the Vs are the same number in terms of dead weight. So you're trying to do a balance there. We're always trying to arbitrage. Listen, a prudent owner controls his costs and his risks. And that's what we were trying to do by having both fleets.
And Ted, maybe, finding your opportunities, right? So as a prudent owner, if you have exposure across a couple different sectors, then you can respond to the changing dynamics in the market that are happening around you, right? So I think that's one of the keys, right? So you are watching both refining, margins, capacity, and crude demand, right? So you're really looking at that whole picture and saying, okay, this sector, I think going forward is going to have, an opportunity for a period of time that could be asymmetric, and you try to take advantage of that.
Yeah, I'm, echoing Lois here, basically to have kind of all these asset classes on one desk where the guys sit next to each other, and you see, you see basically what's happening in other parts of the supply chain that you're a part of. So that's, that's a positive. But I think kind of for Frontline's part, we're also great believers, making it simple. And the VLCCs offer economies of scale. Kind of, historically at least, not the last year, you've seen that, kind of our cash break even between the different asset classes is not really that much difference. But the money you can make on the VLCC on a good day is astronomically higher than Suezmax and an LR2. So we would like to kind of favor the VLCC, to be quite honest, and that's probably been the focus of our business for a while now.
Got it, thank you. Switching gears for a minute, so let's talk about technologies. Are there any technologies that you are watching that have the potential to be important to your business, whether that's on the cost side, the commercial side? Does AI play an important role in tankers going forward? Anything that you guys are thinking about in terms of how new technologies?
Let me go ask.
We can pull it up on ChatGPT and see what it has to say about shipping.
No, but I think kind of, the kind of various listed owners have kind of at least publicly focused to a lesser or a greater degree on digitalization. But digitalization is extremely important for us to effectivize the work we do in transporting oil. And I think kind of, I've been in this industry for only 20 years, but over those 20 years, it's been a massive, development in real-time data analysis, particularly on the kind of running of the ship side, and to make the ships more efficient. In our technical department, the last few hires have been quants, not kind of ex-masters, to put it that way. Basically to structure all the data that we're collecting daily, basically to run a better ship and to try and kind of take away inefficiencies in the fleet. So I think that's kind of the greatest change I think we've seen over the last years.
From our perspective, a comment would be that we have copious amounts of information but very little intelligence. And so that comes down to trying to sort out what are those drivers and where are the inefficiencies that you can take advantage of. So I think that, across the space in the tanker side, there's room everywhere for continuous improvement. The way that we operate the ships today, the way that we equip the ships today, you know, and that data can, you know, help us with that. And, you know, one of the things as you look at the new generation of ships that's coming, you know, the engines do not have the same type of power that they historically did. And I'm like, oh, you know, that can be a challenge when you're in heavy weather. And I'm like, well, that's just going to be a fact of life. And, you know, 15 years ago when you were using a weather service, you know, it seemed like a luxury. Today, you would not run your fleet without always having, and I think that will continue to improve. And, you know, looking out for the ships and forecasting and making sure that we're putting these, you know, masters with the best information that they can have so that they can be efficient and safe. And, you know, that would be an example, in my mind, of, you know, we have a long way to go, I think, in our industry to make sure that we get more intelligence derived from the information.
Ditto what Lois said. I think we have 173 vessels with our different. It's information overload, and we're building filters to try to build algorithms to figure out what to do. But, you know, the system's only as good as the algorithms you build. And to Lois's point, I haven't seen anybody yet in class or otherwise that said, by the way, these D-rated engines, when Buford scale gets to 5 or 6, you may be consuming much more than the other ships with the bigger engines, so the overall savings may not be there going forward. I haven't really seen a drill down on that, and so those are the kind of questions. I like people who have questions, a lot more questions than answers, right? Everybody's got all the answers. I kind of don't want to hear that, but we need people. We're asking a lot of questions. We have a lot of team meetings. We're talking about things, and again, it's a learning process for us to drive the technology, but you've got to get the right questions before you get the right answers.
Great. You know, as you think about some of these topics, and, you know, all three of you have companies which have great scale, and this has allowed you to build great fleets, to invest in, you know, things around the environment, to think about technologies. I guess as that translates down to differentiation and how you manage your crew, you know, do you feel that there's a bigger importance today on the crew on your ships and how they're helping you with some of these things? And maybe comment a little bit on how being part of a larger company with a larger fleet helps you with your crew retention.
You know, anybody who hasn't been to sea doesn't understand how, even with today's modern communications, how lonely it is. And so you can make, you know, there are mistakes, right, with a lot of ships. We go out, you know, we have crews coming from Europe, we have crews coming from the, you know, Philippines, such. We are out there constantly with classes, and our crewing team is out talking to them. We're always trying to educate them. Listen, there's a crew shortage in the world right now. You need a good crew, because one crewman can cause a problem that's going to be, on a VLCC, $100 million mistake, right? And that, you just got to stop that from happening from before it happens and be ahead of the curve in teaching them the importance of every position on the ship, how important it is. So we have a big crew, and they're always traveling, more than we do.
Right. I mean, it's definitely reflected in, you know, people say, oh, Lois, you know, you're outsourced at International Seaways. Yes, and we ring-fenced our crew, and when I go on board, there's an average with the officers of 11 years sailing with us. So when I say, how long you been with us, they're going with their whole longevity of being with the company. And when we took delivery of those Vs out in Korea, you know, we were able to pull from the crew some of our strongest performers that were part of our shoreside operations with operational integrity unit that then were educated to a higher level to be able to handle this LNG fuel transfers. And that's what you want. And the pride in these guys, you know, standing there with us looking toward to the future is just tremendous. So married to a retired seafarer, was a seafarer, better value these guys and gals that are getting it done.
Yeah, I think kind of COVID, you know, it didn't teach us, but it highlighted kind of the importance of the mental welfare of the crew. And I think all the companies here have done, you know, as much as they can to support them, because that was a terrible period for a sailor. At Frontline, we outsource, you know, the technical management and the crewing of our ships, but we retain kind of pools of crew that then kind of, some of them have sailed for Frontline their entire career, but maybe not on the same ship. So the human factor is extremely important, and also not to sound like Svein Moxnes Harfjell, but they also decide a little bit on the efficiency of the ship as well. Kind of if the master or the crew is invested in the company's kind of performance, they can actually on the ship themselves make the ship run better. So it's really, really important not to forget about that.
Great. Well, thank you to the three of you. The 30 minutes goes quick, but we're just at the end of our time. So this has been a great discussion. Congratulations on your great performance. And I think all of your investors are looking forward to more.